Right. Hello and good evening, everybody. Welcome to Portfolio Cashflow for Fridays with I'm Possible Terence. All right, and let's get our session for this week started. Yeah, right now I'm going to keep it really, really short, all right, because there is not much actions, all right, that we can take in this current market environment. All right, okay, now, so I'll provide you a very detailed explanation, all right, of why, all right, just how this market is so bullish, but yet it's so dangerous. Right now, all you need to remember right now is the fact that what we see right now is a market extreme. All right. And when market goes into what we call an extreme mode, all right, or what we call the euphoria mode, all right, it doesn't behave rationally. All right. Okay. Now, so what I'm trying to say is all technicals, all fundamentals are out of the window. Yeah. All right. It's all about chasing this market right now. Okay. And when we talk about chasing, all right, all right, it is linked to speculation. All right. So once we link it back to speculation, all right, all right, that all the buyers we have, all right, are not going to stick around for long. All right, now, so if you're joining me right now in this session, all right, before I get started, all right, can you just leave a comment, say hello over here? All right, so I know you're joining me and you're hearing me loud and clear. Yeah. All right, now, so thank you very much in advance. Now, so once again, all right, I will need to do this over, all right, which is the admin details of joining my Facebook live session. All right, you see the banner on the screen. All right, you see my comments that have been posted out as well. All right, so if you're joining me from Facebook, all right, okay, sorry, do go to the link, all right, streamyard.com/Facebook, all right, okay, and then click on the banner so that your profile will be approved, all right, and when you leave comments during the session or ask me questions, all right, I will be able to know who is leaving those comments, okay, all right, now, and at the bottom of the screen, all right, please remember, all right, that when I do any sharing during the session, all right, this is a disclaimer to all of you, all right, I am sharing with you my thought process, all right, and you're supposed to take this from a learning angle, all right, and for educational purposes, all right, is by no means any form of recommendations at all, right, for you to take any trades, all right, that I will be talking about, right, during my live session, all right, and please remember, yeah, all right, you need to be aware of all risks involved, all right, okay, before deciding to follow any of these trades that I'm putting into my own accounts, yeah, all right, now, so with that, let's get our session started, all right, and we have a Facebook user over here, all right, now, so this is what I mean. All right, okay, when you don't go to the banner, all right, this is how I see you at the back end of my screen. Yeah. All right, so once again, hi, Hoy, hi, John. All right, hi, Mei Ling, hi, Eileen, hi, Susan. All right, thank you for joining me for yet another week. All right, I know all of you have been back over and over again. Yeah, all right, now, so I hope you have enjoyed the journey so far. All right, okay, and I do believe if my memory doesn't fail me, all right, we are into month 11. Yeah, all right, okay, sorry, we are into month 13. Yeah, okay, all right, or rather, month 14. June was 13, July is going to be 14 right now. Yeah, okay, so, oops, my mind is playing tricks on me, all right, we are still in month 13. All right, now, so we have a lot of assigned stock positions right now. All right, our portfolio is utilizing, all right, 140% of our capital base, all right, which is also the extreme mark, all right, of the exposure that I will want in this marketplace. All right, so just how am I going to stretch the cash flow that I've created for the month of June, all right, to achieve our $2,000 target? All right, so we're going to continue to meet that. Yeah, okay, and now, all right, let's have a look. Yeah, all right, okay, my Facebook notification served me late. Yeah, all right, now, so all right, let's get going over here. All right, first I'm going to talk about the market summary. All right, and once we're done with that, all right, okay, we'll come in, all right, and talk about what's in store. All right, now, so here, ladies and gentlemen, all right, let me pull this away. All right, thank you. All right, now, so what we have on my screen right now is the SPY chart. All right, so the SPY simply represents the S&P 500, all right, ETF shares. Yeah, all right, now, so with that, all right, you can clearly see, all right, that we had a breakout. All right, we had a retracement, all right, and then it settled right on the breakout resistance, all right, and it broke off again. All right, so what we have right now is kind of like a confirmed breakout in this market. All right, okay, but okay, one thing you have to be aware of, all right, which I have shown my members earlier this week, all right, is all right the healthiness behind this move. All right, now, so I have changed my right axis over here to represent a percentage gain rather than the price change. right? So if you look at what the SPY has done in the last 6 months, right? Because I have a 6 month daily chart going on. All right, now the SPY has gone up by about 5%, all right, in the last 6 months. Now that's not excessive, all right, but that's not bad at all as well, all right? But okay, if you look at the second major index that we track, all right, which is the Dow Jones DIA, okay, which is the Dow Jones Index, all right? Now, so this is the Dow Jones ETF stock, all right? And then you would actually see that the Dow Jones is actually down by 2.5%, all right? Now, that's a discrepancy, right, that you're seeing over here. Why? Because as all major US indexes, right, they are always correlated, right, for at least the last 20, 30, or 40 years, all right? Okay, they are always correlated, right? When you have an up move, all right, or a down move that's more than 2 or 3%, right? So now we have the SPY that's up about 5%, right? But we see the Dow Jones that is down by 2.5%, right? Now, so let's go to the last index that we track over here, right, which is the NASDAQ. Now, when you look at the NASDAQ, then you realize where all this bullishness is coming from, because you see the NASDAQ is actually up by 20% this year. Now, so when you look at the composite of the indexes, right, the S&P is supposed to be the most balanced index, right, because it comprises of 500 stocks, right, which is meant to be diversified, okay, but it is also a market cap index, which means the bigger your market capitalization of the companies and the shares, right, the heavier weight, right, you bear on the S&P 500. So now we have many tech stocks that have crossed the $1 trillion mark. Right now, so because of that, right, technology stocks actually have a very big say, all right, in terms of the S&P 500 movement, right? So if the entire technology sector is up by 20%, all right, okay, and they actually weigh about 20% of the entire index itself, can you actually see where the 5% gain is coming from? All right, this up move of 5% is actually all coming from the tech sector. Now that tells you that the rest of the industries are actually not doing well at all. All right, now, so if you don't believe what I'm saying, all right, I can quickly show you a representation, right? Because, all right, there are also what we call sector ETFs, right? So let's go to the sector ETFs and have a look. All right, you have XLF, which is the financials ETF, all right, that is down by 8.7%. All right, it's down. Financials is the next 20% sector in the S&P 500. It's down, all right, by 20%. Sorry, by 8.7%. All right, now next one you have is the industrials. All right, now the industrials is down by 2%, which is similar to the Dow Jones, right? Now then, right, you have the XLK, all right, which is the technology, all right, and that's up 20%, which is correlated to the QQQ. Agree? Now, next one that you want to be concerned about is that you have the energy sector that's actually down, right, by 12%. Can you see what's going on? All right, now then you have the consumer staples, all right, here, consumer staples, right, which is actually down by almost 5%. Can you see that? Something is going on. Yeah, all right, okay, now then let's go to the last one. You have the utility sector, which is known and meant to be defensive, that's also down by 8%. Now, these are all sectors, all right, where companies are inside the S&P 500 index. So do you see, right, that what we have is actually a very, very unhealthy up move, right? Where, you know, it's like one man is literally dragging, all right, okay, the entire market up, all right? Then the question I would ask you now is actually this: how long do you think this one person, right, or one item can hold this market up there, all right, in terms of timing? Right? How long can it do it before it runs out of steam, before it runs out of energy? Right. So I hope you see where we're going right now, because what we have, right, yes, it looks like a very bullish move, but yet, right, this entire move, right, is driven just because of Nvidia's earnings, all right, that brought, you know, the whole AI sector into light. All right. So it's very much like what we have, right, back last year before November came, right? The whole tech sector was gushing up, right, because tech earnings was good, right, and there was all this hype, right, Microsoft, Apple, and stuff like that, right? Then only to see that it came crashing in the month of November, right? You start seeing a 20-30% drop, right? Now, so if you don't want to be caught in that situation again, all right, okay, you need to start taking some defensive actions, all right, for your portfolio, all right, okay. Now, so that's why I want to bring to your attention, yeah, okay, all right, and okay, Tanya, right, you have to understand this, right? Now, so yes, we did say, All right, there is sector rotation. All right, okay, now, but then what I'm trying to show you right now is that the entire up move in this market, is absolutely unhealthy. All right, Tanya? All right, why? Because if you have an index that is going up, right, shouldn't all the business sectors be going up at the same time? Right, but that's not what we're seeing. So if the major mover, which is the tech sector, right, starts cracking down, right, can you imagine what it's going to do to this index? Right, because when a market sells off, right, okay, when a market sells off, right, what's the first reaction you usually get? Sell all, think later. All right, so if all the other sectors are down, right, and technology sells off as well, then who's going to keep the market up? You see where we're going? All right, okay, when there's nobody to anyways, there's nobody left to keep this market up, then where it's going to go? All right, you see where I'm going now? All right, okay, so Tanya, I hope you see the danger over here. All right, Andy, I understand that Vesak Day is like last month, but in Singapore, right, we are actually celebrating it today. I don't know why, but Singapore is a public holiday for Vesak Day today, so it's just different. All right, okay, now, so thank you very much, all right, for the wishes. All right, and let's get back to our market, shall we? So now that we understand the risk and the threats in the market, all right, okay, now it will also explain, right, the current positions, right, of some of our trades. Yeah, okay, market, is down, right? Okay, so many of the other stocks, right, which are safety and defensive sectors, right, which is the stocks that we hold, right, like what? Your Walgreen Boots, right, that's considered consumer staples or pharmacies. Yeah, okay, then you have Intel is recovering now, right? We have Verizon, which is telco, right, which is also defensive, right? Then we have Tyson Food, which is consumer staples, right? Okay, we have Pfizer, right, which is pharmacy, yeah, all right, or pharmaceutical, right? We have Hawk, which is retail, Macy's, which is retail, right? Okay, and then this one, consumer staples, right? Okay, and then AT&T, right, which is telco, right? So you realize that we have a lot of defensive sector, right, or undervalued stocks in the retail scene, right? So from the ETFs that I'm showing you just now, right, you realize that these sectors are not getting the love of the money flow. All right, so if they're not getting the love of the money flow right now because it's all going into tech, yeah, okay, so the lack of money flow is preventing these undervalued stocks from being discovered and from being noticed because there's no up move, right? So naturally, it's staying where it is, right? But once the market turns around, right, and once tech stock starts moving, yeah, okay, on the downside, right? Okay, so like Tanya said earlier, the phenomenon of market rotation. So that means when things are coming down, right, all the fund managers who loaded up on tech stocks, right, will have to sell off and hedge their losses. But when they sell off their tech stocks, they cannot sell them and keep cash. That means they have to sell them, but move this money into some other stocks. So when the market gets dangerous, what kind of stocks do you think they'll move their money into? Right? Because, right, they're just trying to park it and keep it safe, right? Do you think they're going to still buy overvalued stocks? No, because the market is risky. So what they're going to do is they're going to start scouring, right, what they call a simple term, a value stock. All right, valued stocks plus defensive sectors plus sectors that have sold off a lot. You see the link now? All right, so while I'm worried that the market can correct, but I'm not worried about the positions we have because these stocks have already been punished, right? And many of them look ugly right now, right? So because they are looking so ugly right now, there's not much ugliness that can be tagged onto it. Yeah. All right. Okay. Now, so having said that over here, right, WBA, right, hasn't done much. Right. So WBA hasn't done much. All right, because you saw that we are only starting this up move. All right. So we're gonna leave it. Yeah. All right. I can't do anything to it right now. Okay. But Intel, right, has enjoyed a surge together with the tech sector. All right. So what I'm gonna do right now is I'm gonna take advantage of this surge, right, and start loading some covered calls because I own. All right, if you see over here, I was assigned 500 shares of Intel. Yeah, okay, so I'm going to take advantage of this, all right, okay, and start selling call options while owning the stock because, right, when tech sector sells off, right, Intel is a major component, right? So there is no way to run, right, but Intel stocks following all the other techs, right, and falling off as well, all right? So because it enjoyed this run, I'm going to take advantage of it, all right? I'm going to use this resistance level over here All right, let me change the things to represent prices again. All right, there we go. All right, okay, so I'm going to use this resistance over here, which is about 32.20. All right, okay, I'm going to set my call options there. All right, now, so for Intel, I have 500 shares, so that allows me to sell 5 call options. So I'm going to sell it for 16th of June, which is this month's expiry. All right, so I'm going to look for 32.50, all right, call options, all right, and they're paying about 36 cents today. All right, so that's going to be the call options I'm going to attach, all right, to my portfolio. All right, so let me quickly get the order out and done. All right, and then we'll come back and entry it in. All right, there we go. All right, now, so I've just gotten the order out. As you can see, it matches the clock on my screen over here. All right, so the order just got filled. All right, I sold 5 over here for 36 cents. All right, okay, so it's done on our official portfolio. All right, so we're going to record it down right now. All right, it's a 32.50 call option. All right, now, so we did it a couple of times before. All right, we got in too early the last time around. All right, we were kind of punished for it. All right, but I'm coming back again. Yeah, all right. All right, so this is going to be for 16th of June. All right, 32.50. All right, we did it on the 2nd of June. All right, 0.36. Right now, so this adds $180 in terms of cash flow, right, to my portfolio. All right, so now we're edging closer. So we're now about, did it add up? Didn't seem like it added up. There we go. We're 1,280. All right, okay, not too far away. All right, about another $700. So let's continue, okay? All right, now, so we have Verizon next. All right, so Verizon is down again today. Yeah, all right, okay, for whatever reasons, but it's definitely not in any cash flow trouble. All right, okay, so if I wasn't in, I'll still be interested in getting in. All right, but my personal motto is if I've taken a maximum exposure that I should in the portfolio, all right, I will not overtrade a single stock. All right, so I'm keeping to that rule. Yeah, okay, now otherwise I would be loading up more. All right, now so I'm keeping with this. All right, it doesn't make sense to sell a call. So our next one will be Tyson Food. Right, so Tyson Foods has enjoyed a run. Right, it has a breakout over here of about $54.50. Right, so let's see if I can get a call option around that pricing. Right, there we go, 54.50. All right, okay, or 54. All right, so we can get a $54 call option for about 20 cents. All right, so that's what I'm going to try to do over here. All right, okay, so I'm going to try to do that. All right, let's see if I can get 20 cents for it. There we go. All right, my pricing, my orders are here at 20 cents, but it's not giving it to me. All right, so we've got to wait and see, yeah? All right, okay, so I'm going to leave it there. All right, I'm going to update all of you before we end off today's session, yeah? Now, next one over here is we got a bounce in retail today, so HBI is up. All right, and then we have Pfizer. All right, okay, so Pfizer is leading a good move over here. All right, I wouldn't mind if I can get some kind of value for $40, 40.50 strike. So let's have a look. 14 cents? Nah. All right, it's on an up move over here. All right, it seems like it's starting to bounce. All right, we have that, higher low, all right, with a good momentum behind it. So it might be the time where, this stock starts to turn and heads towards $44. So I'm going to hang in there. Yeah, okay, I'm going to hang in on this one. All right. So Hog, all right, is recovering today. Macy's is recovering. All right, we have 3M. Let's have a look at 3M. All right, it fell off the cliff again. All right, we got a good gap and bounce today, so I'm going to let it run a little, so no call options. All right, so AT&T, like Verizon is down, so nothing on it. So, yep, that's it, actually. All right, okay, so our Fifth Third, our Apache, our VF Corp, all right, our Devon, our CVS, we're just going to keep those positions. All right, so far for today, All right, I have an order that goes out for Tyson Food covered call that's not filled yet. All right, and then I have my Intel, all right, which is already filled. All right, now so I will keep all of you updated, all right, in the Facebook Live comments, all right, if it does get filled, or we'll come back next week, all right, and have a look at it, all right. But my order is definitely sitting out there, yeah. Okay, my order is out there, it's just not filled at the moment, all right. All right, pardon me. Okay, now, so that's pretty much the portfolio actions I've taken, all right. We've got about, if I'm not wrong, 2 more weeks before the June expiry. Yes, right. 14 days, which is another 2 more weeks before June option expires. Right. So that leaves me another 2 more weeks, all right, to generate another $700 in cash flow. All right. Now, can that be done? I really don't know. All right. But okay, so far, all right, we're going into month 13, all right, and we haven't missed a month. All right, I would say, all right, we haven't missed a month. All right. Okay. So this would be the first miss, all right, out of 12 months prior to that. All right. So I think the success rate, all right, is still going to keep me something happy. All right. And I still made about 1,000, close to 1,003 for this month. All right. Which ain't that bad. Yeah. Okay. So I'm happy, to be in this position if it has to be. All right. Okay. But okay, I wouldn't be complaining. Yeah. Now, so if I still do that, all right, if I had 1,003, all right, my portfolio would have brought in about $130,000 in 13 months. All right, in 13 months. So that's still averaging, all right, over $2,000 in cash flow a month. All right, so that's all right for me. All right, and if you noticed, all right, right now we're actually sitting, all right, and holding on a huge chunk, all right, of shares in our accounts. All right, so many of these shares, all right, would have since paid dividends, all right, in the first quarter itself. All right, but have I accounted for any dividend payments? I haven't. All right, so if I did, all right, our accounts would probably be, quite a few $100s up. Yeah. Okay. Now I would say quite a few $100s up, because if we look at this, right? Okay, we have WBA, and WBA pays let's round it up to make it easy, right? Okay. WBA pays a 48 cents dividend, so I'll count it as about what? 50 cents, right? 50 cents, right? Now we have been holding the stock, right, since the 20th of May last year. All right. Okay, last year. So I would have probably pocketed, right, the May dividend. All right, and 3 months before that will be February. All right, I would have pocketed another set of dividends in February for owning the stock. All right, okay, now that would be 50 cents, right, or $50 per share. And I actually own 500. That's actually worth $250. So my cash flow for this year from this stock itself would have added another $500. $500. All right, I'm happy with that. All right, now, and then, all right, we also held Intel for quite a while now. Right, so Intel's dividend, right, in the last quarter was actually what? $3.65. Right, can you see over here? It was actually paid in Feb, right? Okay, so let's add it up. $3.65 and $1.25. So it's close to about 50 cents again. Agree? Now, so 50 cents again, yeah, all right. All right, for 500 shares, that's another $250. 500, 250, that's 750. Right, that's 750. Right, and then we have Verizon, which is also since July. Right, so if we look at Verizon, right, we have pocketed these two sets of dividend. These two sets of dividends, 65.2. Right, and first in January, 65.2. All right, okay, now so let's make it easy. So that's 65 cents. All right, times 300. So that's about 120, 130, 195, $200. All right, in 2 times. All right, okay, $200. Yep, $200. That will make it $400. Right, in 2023 alone. All right, so we have what? 500, 250, 400. Right, we are well over 1,000. Can you see that? All right, it all adds up. Yeah. All right, now TSN. Right, dividends of 50 cents and 50 cents. Right, so we have 200 shares. All right, so it's 100 and 100, so that's $200. Right, that's adding up. Yeah. All right, and then we have Pfizer, 300 shares, right, which pays us 41 cents, 80 cents, right, 2 rounds, right, on 300 shares, right, okay, so 8, 16, 24, 250, 500 again, right, so you see actually it adds quite a substantial amount, right, to the overall cash flow. It's worth at least 1 month, right, of our cash flow goals, right? So this is the reason why, all right, I don't mind holding on, right, to any of these shares when it comes to the portfolio itself, right? First, because many of these companies are actually paying, right, quite a decent dividend. Yeah, all right. Now, so I'm not complaining at all over here. All right, okay, Facebook user. All right, okay, I was actually selling the 50, let me double check, $54 call, right, on TSN. All right, so on TSN over here, right, we were actually selling the $54 calls, right, okay, on our Tyson food stocks. All right, I'm trying to get it for 20 cents. All right, so it's still not filled yet. All right, it's still working in my accounts. Okay, all right, so Susan, all right, HBI, all right, now the thing is this, all right, for HBI right now, all right, I don't think it's okay, I don't think it's going to recover very, very soon. Okay, all right, but the second thing is I don't think this company is actually going to go bankrupt. All right, okay, now because it's made money, sorry, all right, as you notice over here, it's been making decent profits for a very long time. All right, okay, only in the recent times, all right, it seems to, struggle a little bit. All right, okay, but if you look at their, holdings of brands, all right, they actually have quite really strong brands like, Ralph Lauren. Yeah, okay, all right, they have Hanes, all right, they have Champion. Yeah, okay, which are, pretty strong brands over here, all right, in the retail sense. All right, okay, I'm not too familiar about the rest, but they're probably bigger, all right, in America itself, right? And then for ladies, we have the Wonder Bra. Yeah, okay, right, which is also one of these brands out there, right, where people spend money on. Yeah, now, so all I'm trying to say is this, right? Is the company gonna go bankrupt? Don't look like it. Yeah, all right, but is the company, all right, gonna recover since it has decided to eliminate its dividends? Not really, too, right? But okay, the next question is, right, if we're gonna cut our losses, right, is it the best time right now, if you look at the charts, right, to go about cutting our losses? Not really. Right, why? Because if you look at the weekly charts over here, right, you can actually see that this stock is kind of like making, positive divergences, right, as it heads lower. Yeah, okay, now, so on the technical front, right, it shows that, right, the pricing is recovering, right? Okay, it's not there yet, but it's actually on the recovery, right? So once it sets off a move, right, okay, the pricing can actually recover quickly. All right, now, so if I don't have a better stock to swap it into, then I'm staying put over here, right, which is the current situation, right? Why? Because staying put serves me better than cutting myself out of this position. All right, you see where I'm going over here? All right, okay, Susan. So I hope that helps you out. All right, now, so the next thing is, all right, some of you have been raising, stocks like PayPal, right? Why? Because PayPal, Terence, hey, it's been punished, right? But the earnings are pretty stable. So are you interested in PayPal? The answer is no. Why? Because this company makes about what, $4 a year, right? But the stock is still at 64. So that puts the stock at a PE ratio of about 13. Does that sound cheap? No. Why? Because many bank stocks after the Silicon Valley Bank collapse, right, have fallen to below 10 PE. So PayPal, good safe banks, which are traditional, below 10 PE, 14 PE, which one should I go after? Yeah, all right. So in terms of valuation, PayPal is not cheap enough yet. Yeah, okay. All right, now, so I hope that helps you answer your question over here, Hoy. All right, so if it was me, I won't be putting any trade or any money in PayPal right now. Yeah, and second, right, the main thing I'm not adding any positions today, right, is because my exposure has hit 140%. Right, that means, right, I'm leveraging on my accounts right now. Yeah, okay, I'm leveraging. Sorry, I'm leveraging 40% over my capital, cash capital that I have in my account at the moment. All right, so I don't want to stretch it any further. Yeah, okay, so that's another reason why. All right, I'm not adding any more portfolio puts to the accounts. Yeah. All right. Okay. Now, so comments on MMM and PFE, it's on its way. All right. Why? Because for Pfizer, I've been banging on the door. Right? Does it look like the company is making less money? Not really. The company is making good profits. Yeah. Okay. Now, so all it needs is for things to turn around. Yeah. Okay. All right. And once it turns, nobody's gonna stop it. Yeah. All right. Okay. So if you look at the daily charts over here, can you see that, like what we saw earlier? It's on the recovery. right? And you have a stock right now that is made what, about 450 a year, right? And it's trading at 38 times, right? With no questions about delivering profits. You want to sell this stock at 7 PE? I don't think so. Yeah, all right. Okay, now, so I'm not doing anything with it right now. Right now, but for 3M, it was slightly a different story. We entered the stock when it was about 12 PE. I said it wasn't exactly cheap. Yeah, okay, and I was wrong. Right, it kept going lower. Right, so now, right, you saw this is a 1 day bounce. Right, it goes up by $6 in a day. It's ridiculous, 7% jump. Right, but this same move that you see over here can happen to any of our stocks that we are assigned, right, that you see on our list. Why? Because this is something I've been seeing over and over and over again, trading a portfolio that looks like this over the last 10 years, right? Because I'm trading good quality companies, right? They are still delivering profits, right? But they're just not liked by the stock market right now. But anytime they can attract a fund, right, in terms of how undervalued they are, right, fund comes in and loads up a position in millions, right? And when a fund comes in and loads up millions of stocks, it moves the stock price. And once it moves, it attracts attention of another fund manager. And you see the spiral effect after that. That's why prices like these stocks can move very quickly, all right, once they catch a bid. All right, now, so I hope that explains my position over here, Senzaros. All right, thank you for asking that question. All right, and yep, that's pretty much it, ladies and gentlemen. All right, okay, so it's a short session over here, all right, because there's not much we can do in this current market environment. All right, so as of this week, all right, we are now sitting right at $1,283. All right, so we'll come back next week for a Friday session again, and we have a look, right, at how we can add more cash flow, right, for this month itself. Okay. All right, now, ladies and gentlemen, thank you very much for your time over here. All right, thank you for joining me in this live session. And if you can, once again, all right, please hit the like button, right? Okay, so that the Facebook algorithms will help us reach out to more like-minded people, right, and keen learners like yourself who are coming back every week. All right, so if you find that my contents over here are educational, it can help others, all right, please hit the like button and also share it out, all right, so they can reach out to more people as well. All right, now, so thank you very much. All right, and I'll catch all of you next week once again. All right, bye-bye for now and have a good weekend. See you, everyone. Bye.